to the Ichimoku charts.com daily analysis for the Euro US dollar FX futures for Wednesday, February 6th, 2013. Well, a continuation of the trend to the downside for today's trading. The previous day's trading, we had a candle with a lower high and a lower low. Today we have a candle with a lower high but a higher low. In bar chart terms, it's an inside bar and a bar of indecision. It does raise some doubt about continuation of the trend to the downside, but it also says that the previous trend that was in force, the downtrend specifically, is still remaining in force. It's still intact, and that's because the buyers weren't strong enough to take out the previous high. We traded just to the previous high, and that trading today coincided with the strong resistance around the 136 level. It's the bottom of a zone of very strong resistance that extends all the way up to around 138, and an area that the market traded into roughly about a week or so ago, and which was strongly rejected from that area. So a very, very strong area of resistance. For today's trading, we also saw the market find very solid support at the 135 level, and in a similar way we saw that area hold as support for the previous day's trading and the day before that. For yesterday's trading, we saw the market trade down below there and be strongly rejected from the area below there. So very, very solid support below at 135, but solid resistance for this market, which has held as resistance for 4 of the past 6 trading days at 136. So a very, very indecisive market at the moment, and a market that we really do need to be careful of if we do have long positions, and basically short positions at the moment would be a no-no. We have a second time frame uptrend. The market's trading up above all of the Ichimoku indicators, but certainly if we did hold long positions, we would be thinking about taking some profits and perhaps place a stop down below the 135 level at the moment, probably down below the low of this candle here, which was at 134.62, so probably around 134.50. Now for today's trading, we've seen the buyers lose the control that they had for the previous day's trading. We had a white body candle. The buyers had found some upside momentum, only to be halted at the bottom of this large zone of resistance. But they did close with control. Today we've seen them lose commitment there, and we've seen the sellers take control, but that control has been weakened with the test to the 135 level, and we saw buying come back in. So a weak level of control for the sellers, and it does suggest there is a possibility that the market could test down below the 135 level, but really no very strong sign that the market will test below there, because even though we have had the sellers find some momentum, it isn't really a very solid downside momentum. The amount of net bearish progress that they've made doesn't match the amount of bullish progress for the previous day, and certainly doesn't match the bearish progress from 2 periods ago. So a lot of indecisiveness in this market based on the 136 resistance and the 135 support. Now in terms of the Fibonacci extension, and we're examining the relationship of the first time frame downtrend that the market's in compared to the previous time the market was trending down. And here today, for the 3rd day in a row, the area at or below the 161.8% has held as support for this market. And that does suggest that there is a possibility of a change of trend back up to the upside. So it makes that 161.8% level around the 135 area very, very strong. And in terms of the Fibonacci retracement of the prior uptrend, again here for the 3rd day we've seen the market test to around the 50%, tested below there, strongly rejected from there yesterday, rejected from there today. That's at 134.92, just below 135, and that also suggests that there is potential for a change of trend to the upside. But obviously any change of trend to the upside will be limited by the strong resistance overhead at 136. Now in terms of Ichimoku, a bullish market in the long-term time frame by trading above the cloud, bullish in the medium-term time frame by trading above the Kijun-sen, and that Kijun-sen is pointing flat, and as we know, when that points flat, price action tends to be attracted back towards there, and that's what's happening at the moment. So there is a chance of price action trading down through the 135 area, and if we do see bearish activity below 135 and a bearish close below there, then we could easily see the market testing down to 133.90. But the market is rather neutral in the short-term time frame by trading just at the Tenkan-sen, the green line here, previously trading above, so we had a bullish market, and if we look at most of this trading for a large part of January, this is the first time that we've had the market close at the Tenkan-sen for some time, and if we do see a bearish close down below the Tenkan-sen, it could mean that we've had a change in the dynamics and a change in sentiment, and may lead to the market testing lower. But obviously at the moment we do need to watch that 135 level. Just looking at the Chica span, that is above the corresponding price action, so it's confirming the bullishness that we're seeing in the 2 higher time frames. But obviously I think trading this, we do need to be careful of adding to any bullish positions if we do see the buyers come back in, because we do have this large zone of resistance that extends from 136 all the way up to 138.